Well, hello there and welcome back. The weather outside has finally started to look like spring, but hey, Ottawa's real estate market looked like it didn't totally get the memo in April. Also in April, we had a Bank of Canada rate announcement that had a slightly ominous tone, and we also announced upcoming changes to Ontario's Residential Tenancies Act, which will seek to all but eliminate renovictions, right? But could those changes have unintended consequences? Wouldn't be like our politicians to do that. We're gonna tell you all about all of the things and a whole lot more in your May 2026 Ottawa real estate market update. Ollie, Emma, say it with me loud and proud. Let's go! All right, let's go. Let's go indeed. All right, so before we jump into the freehold and condo stats for the month of April, let's quickly discuss the Bank of Canada's most recent interest rate announcement, which happened on April 29th. On April 29th, the Bank of Canada held its overnight rate at 2.25%. This is the fourth consecutive announcement where the Bank of Canada has held its rate. All right, now a quick reminder, these Bank of Canada rate announcements will only impact variable rate mortgages. They have no bearing on fixed rate mortgages because those are based on the bond market. So variable rate mortgages did not change in April. However, it's worth noting that during the April 29th announcement, Tiff Macklem, who is the president of the Bank of Canada, did indicate that inflation is once again on the rise, and he also indicated that we are likely to see the Bank of Canada increase rates at some point later in 2026 in order to manage that inflation. That said, before you panic, while we largely expect to see the Bank of Canada increase rates later this year, it's also largely expected that the total increase will be relatively small. All right, so they're not trying to 2022 us all over again. All right, at least so they say for now. It's also worth noting that fixed mortgage rates did also go up in April. All right, so as of this recording, the best 3-year fixed rates we're seeing are in the 3.99 to 4.09 range, and the best 5-year fixed rates we're seeing are in the 4.14 to 4.29 range. And then on the variable rate side, the best rates we're seeing are in the 3.55 to 3.75% range, right? So if you are thinking of making a purchase this year, you might be able to save yourself a little bit on interest payments by purchasing now rather than waiting until later in the year. And as always, whenever interest rates start to rise, it's a good idea for anyone who's even just thinking of making a purchase in the next few months to go out and get a mortgage pre-approval done now. When you do that, you'll be able to lock in your interest rate for the next 120 days, and that'll protect you against rates going up, potentially. And of course, if you're looking for a good mortgage broker, we happen to know a few, so reach out to us anytime and we will happily connect you. All right, now that we've gotten that out of the way, let's talk about how Ottawa's freehold and condo property markets fared last month, shall we? As usual, we're gonna kick things off with the freehold stats, which we'll get on the screen for you, complete with sound effects, courtesy of Ollie and Emma, in 1, 2, 3, Ollie and Emma, sound effects. Emma, sound effect. Oh, Emma sounds confused. That's not much of a sound effect. We'll do better in the condo section, I promise. So, in April, we sold a total of 853 residential freehold properties in Ottawa. That was a big jump from our March total of 742, but that is to be expected. So we've talked about the seasons and the typical real estate market in previous updates, so I'm not gonna rehash the whole thing, but suffice to say that April marks the start of our spring market, which usually runs from, again, start of April till the end of June. That 3-month period in just about any given year will see the real estate market here reach its busiest point, right? It's marked by a faster overall pace, a much higher volume of transactions than during any other period, again, in a typical year. That said, in a big picture sense, this year's April total was pretty meager. We had a pretty soft April last year and still managed to sell 899 homes, which of course is about 5% more than we managed this April. In fact, this year's April sales total is the second lowest we've had in 17 years. And the lowest total in that span really shouldn't even count because it was April 2020 when the entire city was in the early stages of its first major COVID lockdown. This is also just the fourth time since 2010 that our freehold market has failed to break the 900 sale mark for the month of April. As far as volume goes, the spring market started off with a whimper. That said, it was a different story when it comes to housing prices. The average sale price of a freehold property here in April came in at $823K, and that is easily the second highest April average we've ever had in Ottawa. The highest ever April average, in case you're curious, and a lot of you probably already know this, but the highest ever April average came in 2022, right as our market was hitting its all-time peak, and that number was $889K. I don't think we'll be seeing that again anytime soon. All right. So, what do we make of low sales volume, but really high average sale prices? Well, it tells me that buyers right now are prioritizing quality, right? Buyers in this market are primarily end users rather than your investors and house flipper types, right? And end user buyers tend to prioritize getting a great property over getting a great deal. In fact, anecdotally, I can tell you that I personally helped various clients with 2 purchases and 2 sales last week. And out of those 4 transactions, 3 of them went into multiple offers, right? And not a single one of those 3 properties was underpriced or set up for multiples. They were just great properties that generated a ton of interest, right? And in each case, even though the properties that we were involved with generated multiple offers, there were a number of other similar properties in the same neighborhoods that had been sitting on the market for weeks and in some cases months. So you could argue that on those other properties that are sitting, the value for money is equal, if not better, right? But those properties weren't quite as turnkey. They're maybe a little more dated. They aren't being presented or marketed as well as the homes that are getting a ton of attention. In this market right now, what we are seeing is that high quality preparation, presentation, promotion, positioning, and pricing, the 5 Ps, really matter for sellers. And then if you're on the buying side, just know that properties that hit all those check marks are getting a lot of attention, and so you need to be ready to compete. Get yourself an agent who understands how to be successful in that type of environment, and make sure you've crossed all your T's and dotted all your I's before you go out shopping. Now, let's quickly talk about our 3 indicator stats before we jump over to condos, right? And those indicator stats, of course, are inventory, sales to new listings ratio, and the average time it takes to sell a home here, right? Those 3 stats can be used as rules of thumb to give us an idea of what type of market we're in on the whole. So first up is inventory, which is a stat that looks at the relationship between supply and demand and is measured in months. Ollie thought I was going to call on him there. I got something coming for you later, my friend. For the month of April, we saw our freehold inventory increase from 2.87 months to 3.1 months. Ollie, what'd that mean in practical terms? He's giggling.
What was it?
So freehold inventory increased in April, 2.87 months to 3.1 months. What does that mean? All right.
There's more houses on the market.
No, not quite. There are more houses on the market, so technically you're not wrong. But an increase in inventory, like the one we saw in April, means that for the month, freehold supply outpaced freehold demand, right? And the fact that we now have 3.1 months of inventory also means that based on the current pace of the market, it would take us about 3.1 months to sell out of all of our current freehold listings. A few quick notes here. First, inventory typically comes way down in the spring, right? So to see it come up from March to April is a little unusual, but it's not a huge surprise given the type of year we've had. We had a pretty crappy March here as far as the weather goes, and so I think a lot of sellers just really held off on listing, which then of course led to an outsized spike in new listings for April. I fully expect we will see inventory drop next month, and if I'm wrong, now that would be a much bigger red flag. Not because I'm wrong, but because inventory should be coming down, not up. Second note on inventory here, in a vacuum, 3.1 months of inventory is pretty low, right? It technically falls into the range we'd expect to see in a soft seller's market. However, 3.1 months is a fair bit higher than what we are used to seeing here for the month of April, right? In fact, This is the first time since 2016 that our freehold inventory finished April above the 3-month mark. All right, so again, we're getting some mixed messages from the market right now. Moving on, our sales to new listings ratio for April was at 41.6%, which falls into that stat's balanced market range, but just barely. All right, anything below 40% would actually be viewed as a buyer market indicator. All right, so our inventory and sales to new listings ratio stats may seem to be painting different pictures, right? Soft seller market versus almost buyer market. However, I wouldn't get too caught up in the static ratios for those stats. What's more important to note is that for the month of April, both of those stats trended in the same direction, right? Which would be that they trended toward the buyer market side of their respective spectrums, right? So that's an indication of some underlying weakness in the market. Finally, the homes that sold in April on average spent 35 days on the market before doing so. That is also within that particular stat's balanced market range, which I will remind you is anywhere from 30 to 60 days. All right? Woo! And that, ladies and gentlemen, will do it for the freehold stats this month. Now, let's quickly talk about how the condo market fared last month before getting into the upcoming changes to Ontario's Residential Tenancies Act. All right, Ollie, Emma, you know the drill by now. Sound effect time. We're gonna get those condo stats up on the screen for you in 1, 2, 3. Okay, it's progress. It's progress. All right, so in terms of sales volume, our condo market in April performed a lot like our freehold market did. All right, we sold a total of 283 condos here in April. That was a nice, predictable increase from March, the month that comes before April, where we sold just 243 condos here. However, this year's April total was about 18% lower than last year's April total of 333 sales. It was also the 4th lowest April total in the past 17 years and just the 5th time since 2010 that we have failed to break the 300 condo sales mark for the month. Emma, I know the kids don't say weak sauce anymore. You taught me that. But would the kids say that this year's total was pretty mid?
Yeah.
All right, yeah. Hey, all right, there we go. You're not just gassing me up, are you? All right, yeah. I'm so hip. So similar trends in our April freehold and condo sales volume stats. Prices, however, were a different story. April's average sale price for condos came in at about $427K. On one hand, that's not a particularly noteworthy total because our monthly average sale price for condos has landed somewhere between about $410K and $455K in almost every single month for well over 3 years now. We're actually coming up on 4 years for that pretty soon. That said, this year's average is well below our April 2025 average sale price of about $448K, and we've already fallen below the lower bound of that $410 to $455K range once this year. That's the only time that's happened in well over 4 years. And the rest of our monthly averages for 2026 have all been in the lower half of that same range, right? Whereas we would typically expect them to be closer to the upper bound at this time of year. On the whole, the vast majority of segments within our condo market continue to trend downwards and show some real weakness. Speaking of which, we ended April with 4.36 months of condo inventory, which was essentially where inventory also was at the start of the month, right? So we were basically flat for inventory in April. So condo supply and condo demand were about even for the month, in other words. In a vacuum, that's not too bad, and 4.36 months is still technically within the range we'd expect in a balanced market. But at this time of year, we normally expect to see inventory levels coming down. In fact, much like freehold, this is the highest level of April inventory we've seen here since 2017. And things were not much better for our condo sales to new listings ratio for the month, which came in at 38.8%. That's down from March, and it also falls below the balanced market threshold for that stat and into what I would call soft buyer market territory. Again, I wouldn't make much of that if this were January or even February, but at least for the past decade or so, it's not something we expect to see in April. And finally, for the condos that did sell in April, like this one, the average time on the market before selling was 40 days, and that falls into that stat's balanced market range. So on the whole, it's kind of the same old story right now for condos. Condo apartments, especially in the extended downtown area, are in a full-on buyer's market. Selling across that segment requires very competitive pricing and patience. The market right now, if you've got a condo apartment, the market doesn't care what you paid for the unit 3 or 4 years ago, and it certainly doesn't care about like what you need to sell for. If you're not priced to offer the best bang for buck among your competitors, you are deader than the Boston Celtics. That said, other segments of our condo market, namely townhouse and stacked units outside of downtown, are faring a bit better right now. Most of those segments fall somewhere within a balanced or soft buyer's market. All right, so that'll do it for the condo stats this month, folks. Now let's talk about renovictions, which were a hot topic in April. So first, a little background to set the stage for you. On April 27th, a number of changes to Ontario's Residential Tenancies Act were formally approved. The approved changes are scattered across 2 separate bills, Bill 60 and Bill 97, and some of the changes will take place as of July 1st of this year, while the rest will come into effect on September 21st also of this year. We've already covered Bill 60 and a bunch of those changes here in the past, so we're not going to rehash them again here. You can always go find those videos if you're interested and, like and subscribe. That said, the April 27th announcement also contained significant new changes to the process a landlord will be required to follow when removing a tenant from a unit for the purpose of completing renovations. And that is what we're going to tell you all about. So here is how things currently work at a high level. Okay, remember, these changes have not come into place yet. Okay, so currently in Ontario, a landlord can force a tenant to vacate their unit in order for that landlord to carry out renovations. A landlord would do this by serving the tenant with a form known as an N13 form, right? So the landlord serves a tenant with an N13 form and gives the tenant a minimum notice of 120 days to vacate the unit. Okay, there's also an obligation for that landlord to compensate the tenant in this scenario, and that compensation is usually 1 month's rent for buildings with 4 units or less, and 3 months rent for buildings with 5 or more units. It's worth noting that there are some additional nuances within the rules to account for various scenarios. It's also worth noting that N13s can also be used in situations where a landlord plans to demolish a property or just full on convert its use from residential to something else, okay? But when it comes to using an N13 to renovate an existing unit without changing its use, that's how the process works at a high level, all right? So you serve the tenant with an N13, you give them 120 days notice, a little bit of cash, and they have to move out, right? And this is all perfectly legal so long as the renovations are significant enough to render the unit unlivable while they are taking place. Now, the thing is, there's no standard definition of an unlivable unit, okay? We've kind of left that up to the landlord's interpretation, at least for now. The other very important note about the current rules is that a tenant who is forced to vacate their unit so that it can be renovated does technically have the right to return to that unit at the same rent after the renovations are complete. But in order to exercise that right, the tenant must inform the landlord in writing and before their move-out date that they intend to return to their unit once the renovations are complete. So those are the current rules in a nutshell. Now, the spirit of these rules, as far as renovations go, was to provide a means for a responsible landlord to perform repairs on units that had gotten to the point where they were basically unfit or unsafe to live in. In practice, however, many landlords are using the current rules as a means of removing long-time tenants who are paying below market rents for units that are perfectly fine. Right? So once those long-time tenants have moved out, the landlords will then perform cosmetic renovations and then re-rent the unit to a new tenant at a much higher price. Right? This is a practice that's come to be known as renovicting a tenant or renoviction. And I want to stress here that while renovictions were not the intent behind the rules, again, they are perfectly legal under the current setup. Now, you might be saying, but Serge, didn't you just say that the tenant could just return to their unit after it was renovated for the same rent as before? Well, what's the problem, right? Yes, technically that's true. However, what a lot of landlords end up doing whenever a tenant expresses an interest in returning post-reno is that they tell the tenant that the landlord really doesn't know when the renos are going to be finished. You know how these projects go, there can be delays, it could take a really long time, etc. So the tenant ends up having to commit to returning before they move out and without knowing when their unit would even be ready to reoccupy. Now, that obviously makes things very difficult on the tenant, right? Temporary accommodations tend to be hard to find and they also tend to be quite expensive, right? So in many cases, tenants who would have liked to move back in just give up and find a new place to go and live. And then in those rare cases where the tenant does insist on returning regardless, landlords will often end up just further delaying the projects or even canceling the reno altogether. So that's the current environment. However, as of September 21st of this year, the following changes will take effect. First, landlords who are seeking to end a tenancy for the purpose of renovations or repairs will now be forced to provide the tenant with an estimated completion date for those renos or repairs in writing. And the landlord will also have to keep the tenant informed, again in writing, of any changes to the estimated completion date and of the final completion date as soon as it is known. Now, the second change that will pair with that first one is that a landlord will also now have to provide the tenant with a period of at least 60 days to reoccupy the unit after renovations are complete. So that will give the tenants a lot more time and flexibility to decide whether or not to move back into their unit. They no longer have to make the decision before they even move out. They can wait to see the renovations complete, go in, check it out, and they've got 60 days to decide whether they want to move back in or not. Also included in the new rules is a provision that will allow tenants to go to the landlord-tenant board and seek damages against landlords who have failed to provide the required notifications during the renovation process and or landlords who have failed to provide the tenant with the required 60-day window to reoccupy the unit after renovations. And in cases like the ones I've just described, the timeline for a tenant to seek damages from their landlord will be 2 years from the time they first moved out or 6 months from the time renovations on their unit are completed, whichever comes last. Okay, so we're gonna give them quite a bit of time. And finally, these new rules will also double the maximum fines imposable on landlords who get caught cheating the system. And what that means is that for an individual landlord, the maximum fine for breaking the rules will go from $50,000 to $100,000, right? And for a corporate landlord, it'll go from $250,000 to $500K. All right, so those are some serious fines. That is literally enough to bankrupt some landlords if they get caught. And that's not all. In addition to everything I've just said, certain municipalities have taken it upon themselves to take these new rules one step further and will now be requiring landlords to provide approved quotes from licensed contractors or even approved rental permits when serving a tenant with an N13 notice. All right, so no approved quote or no permit, N13 is not valid. Now, for what it's worth, Ottawa is not one of those municipalities, at least for now, though they are receiving pressure from tenant activist groups to follow suit. Of course, we'll keep you posted if anything changes there. Those are the changes. What do we think? All right, I'm gonna give you some quick thoughts on this, both good and bad, before we wrap here. We'll start with good. Obviously, I believe it's important to keep good tenants in their homes. All right, you always hate to see a situation where good people are forced from their home and in some cases even out of their entire neighborhood, right? Because prices have just gotten too high. Also, as much as I despise bad tenants who cheat the system, I equally despise bad landlords. Right? And so I actually love the idea of penalizing landlords who act in bad faith, so long as we also give the good landlords an equally effective means of getting relief from bad tenants. And that really leads me to the greater point here, which is that while I acknowledge that the current rules are often used in let's say, less than good faith, I do reject the notion that all renovictions are from big bad landlords who don't care about the poor innocent tenants, right? Some of that is absolutely true for sure. That dynamic does exist. However, the fact of the matter is that Ontario's tenancy laws and the way the landlord-tenant board is currently set up deeply favors tenants to a fault, in my opinion, right? And because of that, I can tell you with confidence and from experience that at least a portion and a significant portion of renoviction notices are served by landlords who are stuck and feel like this is their only recourse to get rid of a tenant that's just not playing by the rules, right? A real problem tenant, not paying rent, causing damage, problems for the neighbors. Landlords in a lot of cases don't actually want to renovate these units, but again, it's the only way they can get rid of these problem tenants, right? And again, that is all due to the current sad state of our landlord-tenant board. Right? And so my greatest criticism around these new rules is that we are once again creating rules to address a symptom rather than a cause, right? And in doing that, we're just swinging the pendulum further in favor of tenants in a manner that will certainly help some, but that could also have some very negative unintended consequences. For one, it's a slippery slope to further de-incentivize landlords from completing repairs on their properties. Also, let's face it, the permitting process in most municipalities is brutally slow and extremely cumbersome. Also, like many major repairs can effectively be completed without a permit. For a municipality to force all landlords to obtain a permit before serving N13 just seems ridiculous to me, and quite frankly, it just reeks of a cash grab. And finally, if we continue to ignore the fact that Ontario's landlord-tenant board continues to fall well short of its mandate, and instead we just keep layering on these one-sided surface level fixes, we're just going to end up discouraging people from becoming landlords altogether. I know that some of you watching this, who just heard me say that, may think that that sounds like an amazing outcome, no more landlords, right? But I'll remind you that one of the main contributing factors, if not the main contributing factor to housing unaffordability, is a lack of supply, right? And if you remove landlords, not only do you remove current rental supply, but you're also removing buyer demand, which leads to a decrease in the creation of future rental supply as well. So in my opinion, you're just trading a short-term fix for a long-term problem. And I don't want you to have any short-term or long-term problems when it comes to your housing situation. So if you are thinking of making a move, or if you have questions about the process, I'm always happy to chat. You can reach me directly using the contact information below, or you can use the Calendly link in this video's description and directly access my calendar and book a discovery call with me at a time that works for you. We've got a lot of clients to get back to. We are in the spring market after all, so we're gonna say goodbye for this month. As always, thank you for watching. I'm Serge Papineau from the Papineau Group in Ottawa. I appreciate you, and we'll see you next month.